Hello guys, welcome back to my channel. This is Gideon Forex Academy. If you are new on here, consider subscribing, like this video and share with your friends. Comment down below what you think about this video that I'm going to be doing right now. Okay, so today we are going to be looking at a very common mistake among Forex traders that they keep making over and over, and it costs them money. So today we are going to be looking at that and how to avoid making the same mistake. This is a very common mistake and it is costing you money. I know you have made the same mistake if you have been trading. So let's go over to the charts and I will show you on the screen. First, I'll explain the problem and then I'll give you a solution. So watch this video till the end, and if you find value in this content, consider subscribing, guys. Most of you are watching the content without subscribing. It's only fair that when you watch something and you get value for free, you consider subscribing and also like the video, share with like-minded traders. So today we are going to be looking at the disadvantages of trading these pairs in these two categories. And I'm going to be showing you those categories. Avoid losing money, avoid trading like this. So watch this video till the end to understand what I'm trying to say. Many traders make this mistake. All right, and so today we are going to iron out that mistake so that we don't lose money or we don't make the same mistake. So what you are looking at on the screen here, you are looking at a positive correlation, and I'm going to explain what that is, positive correlation. And you are looking at the second category, which is negative correlation, and we are going to be looking at the disadvantages of trading these at the same time, or opening positions at the same time for all these pairs. So these are just examples. I'm going to be giving a few examples, but of course there are others in the market. Forex market has so many Forex pairs which you can actually put in these two categories. So the first category is positive correlation. What does positive correlation mean? It means pairs, okay, pairs which move in the same direction and usually have the same price action printed out on the charts, or they have the same market structure on the charts. What I mean is if for example, JBP USD and Euro USD have a positive correlation, all right, it simply means that when Euro USD is bullish, okay, JBP USD is also bullish. And usually when you look at their price action on the chart and the market structure is quite similar. It means when you are buying Euro USD, JBP USD is also likely a buy. The market structure is usually the same. Okay, the direction of the market is usually the same for both these pairs. Why? Because they have what we call a positive correlation. They move in the same direction. If one is bullish, the other one is also bullish. If the other one is bearish, let's say Euro USD is bearish, okay? It's moving downwards, okay? It means JBP USD will also be bearish. That means if you are selling Euro USD, you are most likely, it means also JBP USD is a sell. So they have a positive correlation. They move in the same direction, guys. All right. So don't forget that. So now the second example I can have, which is other two pairs which have a positive correlation, is these pairs here, USD card, okay, and JBP card, okay, right? So when you have a pair like USD card and JBP card, they also have a positive correlation. It means if USD card is bullish, okay, let's say USD card is bullish, all right, let's say USD card is bullish, it means JBP card is also most likely bullish. They have a positive correlation. They move in the same direction. So if you are buying US card, You are most likely also going to get the same results when you buy JBP card. Okay, so they have a positive correlation. If USD card is moving south, or it is a sell, or it's bearish, it's most likely that JBP card is also bearish. So they have a positive correlation also. All right, they move in the same direction. So take note of that, guys. All right, so what is the disadvantage? Now, this is how you avoid losing money. Some traders, okay, not all the time, but some traders, this is very common for traders. Traders make the mistake of trading trading pairs with a positive correlation at the same time. They open positions for Euro USD, for example. You open positions for Euro USD. If it is a sell or buy, you open the positions. Let's say it is a buy for Euro USD. You open the position for buy, okay? And then you also open a position for buy for JBP USD, okay? They may all go into profit if the trade goes in your favor. This is now the advantage of trading these pairs which have a positive correlation. If it is a buy and you buy Euro USD, open positions for Euro USD on a buy, and then you also open buy positions of JBP USD. If it goes in your direction, it means you are going to make money, right? All right. But let's say that you buy Euro USD and you also buy JBP USD, okay? Different positions, different pairs, all right? And then Euro USD decides to go south. You begin losing your money. You begin losing money. It goes in a drawdown and it hits your stop loss, you lose money. But you also opened a position on JBP USD. So you are also losing money in GBP USD positions because you also opened positions on a buy for JBP USD, but now the market is going down. So you are losing money in Euro USD and losing money also in JBP USD. That is why many traders are sometimes losing money. That is one thing you have to avoid. Never trade pairs which have a positive correlation at the same time. Don't open positions, multiple positions for both of them. The best thing to minimize the risk, you choose only one of them. Okay, you can choose to trade Euro USD and leave out JBP USD. That is the best thing to do. You can choose one of the pairs to trade. For example, you can choose here Euro USD and leave out JBP USD, or you choose JBP USD and leave out Euro USD. Don't trade them at the same time. The reason is because if you are losing in the, for example, if you are losing in the Euro USD trade, you only lose a little bit. You don't lose much. But if you have positions also open for JBP USD, which is a correlating pair, and you are moving in the same direction, and they are all moving in the same direction because they have positive correlation, it means you are going to be losing money in both pairs with positions open. So to minimize risk, choose only one, okay, of the correlating pairs to trade. Okay, don't make the mistake of opening positions on both correlating pairs. In case the market goes against you, it will be more loss. Guys, listen to this, very important. So the same applies to the second example here. If you are buying US card or USD card, okay, choose only USD card. Or if you are selling USD card, choose only USD. Don't open other positions or more positions in JBP card, because these USD card and JBP card have a positive correlation. They move in the same direction. Whether they are selling or buying, they move in the same direction. So choose only one to minimize risk. All right, so that you don't have many positions open and you are and if it goes against you, you are losing more money. Very important. So that is a positive correlation. Positive correlation simply means they are moving in the same direction. They are moving in the same direction. All right. So this is an example of Euro USD. All right, we can see that this is on a daily chart. I'm just showing you as an example of Euro USD. Okay, our technical analysis for this, I would consider this area here. Okay, you can see this reaction. This is an area more like this is a support area. All right, and the price is reacting to this point here, this area. It's reacting right here. Okay, so we are looking at the price already broke below here. There was already a break below here and the price returned to retest here. Now we are looking at Euro USD dropping in the next coming week, most likely dropping further down. All right, after the retest here. Okay, if you can see, there is a retest over here. If we go to lower time frames, that you can see very clearly, and we are looking at selling Euro USD this coming week. All right, that pair Euro USD is clearly dropping. We can also draw a trend line right here. This is clearly dropping if you touch from there to there. So this is what we can see right now. Okay, when you go to a 4-hour time frame, has formed a head and shoulder pattern, which is very perfect. You can see this is a head and shoulder. This is the head, and that is the shoulder, one shoulder, and then the other shoulder. This is on a 4-hour time frame, guys. So we are looking at the price breaking below here next week. This is the neckline right here. This is the neckline of the head and shoulder pattern. Okay, so what we are looking at is a break below here, a slight retest, then a drop all the way to the downside here. This would be our target right here. This is our first target. Okay, this is our first target right here. Okay, so we are looking at selling all the way down here. That would be a significant number of pips to the downside. And please don't sell on a 4-hour time frame. I'm just illustrating to you and showing you and speculating on how the market is most likely to where the market is most likely to go with the Euro USD. All right, so but when you go back to a 1-day time frame here, and then also down here and all the way down here, this is possible, guys. Okay, so it's possible for the price to drop even further to this point, then to this point, and then to that point, guys. Okay, and if you are a long-term trader and you are holding that for a long term, so this is possible. So this is Euro USD. Okay, this is Euro USD. Let me show you. As you can see here, Euro USD is very clearly bearish. It's a very bearish market, and we're looking at selling. We see on a 4-hour time frame that it's a head and shoulder pattern. It's very clear, and we are looking at selling. All right, we are looking at selling after the retest here. Okay, let's go to JBP USD, and you see the positive correlation I'm talking about. On a daily time frame, you can see more or less the same behavior, okay, as in Euro USD. The structure is almost the same. So this is also a downtrend for JBP USD. The price has broken below this area, this support, and we can see that there is a retest of that trend line and also the support level there, and the price is beginning to drop. So the price is beginning to drop there. All right, price is beginning to drop at that point. Okay, so when we go to a 4-hour time frame, it's really a sell. We are anticipating to sell this week, and our first target would be this one here, and then our next target would be this one here, this point here. Another target would be these lows right here, okay, as the market drops all the way down. Okay, so we are looking at that this week. Okay, if the price breaks below this point, okay, we are looking at selling. We are looking at selling all the way down to these areas down here. Okay, there is also a possibility of the price returning to retest this level here. It's possible the price can return to retest here before it drops all the way. So don't be quick to place your sell orders. Just wait for a confirmation before you can place those orders all the way down. So as you can see, JBP USD and Euro USD have a positive correlation, moving in the same direction, guys. So as you can see, USD CAD is moving, is very much bullish. Let's say on a daily time frame. Okay, previously you can see I'd already marked out here. Okay, the price broke out about around this point. Price broke out around this point, and ever since it has been going up. Okay, this is the target for me has been a 720 pips up here. Okay, and that has been moving up since 17th September of last year. Okay, so it's still rising, and if it breaks above this level, then we are looking at continuation all the way up. Okay, this is what we are looking at. You can even draw another trend line right there. Okay, from the bottom here, connecting all the way up. Okay, this would be more clear on a 4-hour time frame. Probably waiting for is a continuation up, but this price can also drop down to retest this trend line before continuing up in that fashion. Okay, so this is USD CAD. Let's look at JBP CAD to see if it's moving in the same direction as USD CAD. You can see on a daily, as I've already marked out here, I have my targets. You can see this trend line over here, it's really showing that this is also bullish. Just as USD CAD is bullish, JBP CAD is also looking bullish. All right, it has tested this trend line several times, so we are looking at that upward movement. Okay, all the way up there. If you hold long term, this is a possible move to the upside, because right now this is the structure that we see on a daily time frame. It's very much bullish, and it has broken out of this consolidation. Okay, the pink area that I've marked out here on a daily time frame was a consolidation, but we see a breakout around this area. For those who want a setup to look at long-term trade, this would be a good one for you guys. More than first of all, from only this point to that point would be 793 pips, because this is a daily time frame. So this first target would be about 790 pips. The second target would be about 1,740 pips. Now, in the next category, which is the negative correlation, okay? Pairs which have negative correlation, for example, the Euro USD and the USD CAD, all right? And the JBP USD and the USD JPY. We are going to look at least these pairs, all right? These ones have a negative correlation, which means in this case, for example, if the Euro USD is bullish, it means the USD CAD is bearish, okay? They have a negative correlation. They move in the opposite direction, okay? Their movement is in the opposite direction. So that those have a negative correlation, all right? And if, for example, the JBP USD is bullish, the USD JPY is most likely bearish, all right? So they have a negative correlation. So how do you also have to avoid trading both of these pairs at the same time. If you are buying the Euro USD,
You want to avoid selling the USD card. The reason is because if you bought the Euro USD and it is in a loss, okay, and you lose the trade, it means even here you will be losing the trade, because if you sold here, it means it will move up. All right? Why? Because the US dollar here is the quote currency, and the US dollar here is the base currency. I hope you understand. So even with negative correlating pairs, you don't want to open positions, opposite positions at the same time. You don't want to buy one pair and sell one pair, or you don't want to sell one pair and buy one pair. It's because you'll be losing in both if the price goes against you. All right? And you'll be losing if you'll also be making money, okay, if the price goes in that direction which you have. So it's very important, just like in the positive correlation, you have to avoid opening positions in negative correlating pairs too, in the opposite direction. What I mean is, don't sell, don't buy GBP USD and sell USD JPY. If GBP USD goes into a loss, even USD JPY will be in a loss, because here it will be moving up. Okay, if you have bought GBP USD and the price of GBP USD falls, okay, it means if you have also sold USD JPY and the price of USD JPY goes up, okay, it means the US dollar is strengthening and it will go against you. So you will be losing here with USD JPY and you'll be losing here also. So to avoid losses on both sides, you choose only one pair to minimize risk, so that even if you lose on GBP USD when you are buying, you don't have positions on sell open for USD JPY, because you will also be losing here if you had opened the positions. All right? So that is very, very important to understand, guys. So avoid trading pairs which have a positive correlation, and also avoid opening multiple positions with pairs which have a negative correlation. That is only for risk management. It helps you with risk management. All right? And so we are going to be looking at real charts so that you can see how these pairs behave. So we saw that Euro USD is very much bearish. Okay? As you can see, it's very much bearish. But when you check a pair like USD CAD, okay, let's go back to USD CAD. USD CAD is bullish. All right, we can see that Euro USD and US CAD have a negative correlation. US CAD is bullish and Euro USD is bearish. All right, let's look at another one. We saw that USD JPY is bullish. All right, you can see the movement up. USD JPY is bullish, all right, on a 4-hour time frame. So this USD JPY has a negative correlation with USD, with the Euro USD and GBP USD. That means if the USD JPY is bullish, as we can see, USD JPY is bullish, okay? USD JPY is bullish, but the Euro USD is bearish, and the GBP USD is also bearish, okay? So they have a negative correlation. So that was the lesson, guys. So Avoid the mistakes of trading pairs which are moving in the same direction, which have a positive correlation. And also watch out for pairs which have a negative correlation, which move in the opposite direction, so that you can minimize risk and also avoid losing money in the market. Avoid trading pairs which have a positive correlation, opening multiple positions, because it increases the risk of losing more money. Alright guys, thank you guys for watching. Give the video a like and consider subscribing. Until next time, bye bye.